Morning everybody and welcome to today's morning market. So on today's morning markets, I'm going to build on Paul's video from yesterday where Paul was discussing what was happening this week with the Federal Reserve and the Federal Open Market Committee. So just so we all know, today's expectation is for a 0.25% increase in interest rates in the US. So as I said before, a big day for data releases today, where the expectation is for a 0.25% increase in interest rates in the US. So that will be the 10th rate hike since March last year, and it will take the Fed's benchmarking lending rate from near zero to 5.25% in little more than a year. But firstly, why are central banks, it's not just the Federal Reserve here, raising interest rates? They're raising interest rates because inflation is elevated and they're raising interest rates to cool demand. One thing I would say is, at a headline level, when we look at inflation, that has worked. So if we look at CPI in the US, it peaked out at 9.1%. It's come down to 5%. But actually what we're finding is the services component of inflation is proving very sticky. But what are investors listening for? So they'll be listening to the Fed chair, Jerome Powell, and the post-meeting press conference for potential indications of what happens next. What does the US central bank do with interest rates moving forward? If we look and we think around what could come out within the post-meeting statement, a lot of investors are betting that the Fed say that they will pause raising rates from here. And just finally for me, obviously a lot of focus has been on the US banking sector over the past few days, and how will the challenges in the US banking sector potentially affect the rate decision today? So the view on what happens with rates today is that they will rise by 0.25%, and what is happening within the banking sector won't affect that. But I think what is important is what happens moving forward. Now, what we are very likely to see, and we've started to see this already, is credit conditions tighten. So lending standards become higher for both individuals, but also for companies as well. And I think when we think around, one of the key reasons why the Fed are potentially going to pause from here, that is that reason. They're going to wait to see what happens within the banking sector, and they're going to wait to see what are the effects of the lagged interest rate rises that are coming through. That's everything from me. Look forward to speaking to you soon. Thank you very much.